Hello everyone and welcome to today's cryptocurrency update for Monday, April 11, 2022. Let's have a look if the B wave is over or not. If it is over, what can we expect? So let's have a look also at the halving cycle, in this case for Bitcoin. And the way Bitcoin goes is pretty much the way everything else goes. Bitcoin is the 900-pound gorilla in the room. So let's have a look. Here is a halving cycle presented by Plan B at $1 trillion or planbtc.com. You can find it here. I always want to reference, of course, people's data I use, publicly available. You can find it on Twitter, it's fine. So in teal, we have the halving cycle for Bitcoin between November 2012 and July 2016. Remember, there is only a finite number of Bitcoins that will be mined. And I think in a couple of years we'll be done. Nothing more will be ever produced. So in that sense, we cannot have inflation on the cryptocurrencies like we have in regular currencies. It could be a good thing, could be a bad thing, time will tell. That's besides the point. What we see here in blue is then the halving cycle from 2016 through 2020, and in red is then from May 2020 till now. So the idea is that financial markets, including cryptocurrencies, are of course fractal in nature, meaning that they past doesn't get exactly repeated, but it rhymes, right? Past performance, no guarantee for future results. And the history doesn't repeat itself, but it often rhymes, as Mark Twain famously wrote or said. And that's kind of what we're comparing here. We always want to know what's going to happen next and with what kind of likelihood and probability. So what is, of course, in importance is the pattern. What we see here in teal is that after about 13 months from 2012, so in 2013, Bitcoin topped. Now, this is all normalized to current price levels, okay? So starting, of course, with here the same, and then you just see, of course, that the increase is much higher earlier on than it is now. We simply said a price increase from 50,000 to 100,000 is the same as from $5 to $10. The absolute price gain is, of course, a lot more, but from 5 to 10 is much easier to get to. Anyway, we see a similar pattern. We should top and then decline and then rally again. So what we've done so far is we've put in a primary and secondary top, so to say. Similar here in teal, similar here in blue, and we should now decline into around month, I would say between month 26 and 33. So an average is somewhere around month 30. We're currently in month 23. So this means we should see another about 6 months decline, which would actually get us into the fall. I originally said the summer, but this could get us into the fall. I'm sorry, my math was off, but this could last a little bit longer. So how is that then going to look a little bit more in detail? So here I have the price data since March 2007 into March 2020. So that is this blue line, right? So we're tracking the blue line. I don't have the data for the 12 to 16, but that's fine. And I overlay the top back then versus now and see if we can find similarities. So we have reasonable similarities, the top here, then the first bounce pretty much here was actually the second bounce, and then another bounce here in April of 2018 and a bounce here in March, April of this year, and we should now be in this initial decline, and then another bounce, and then another decline. So this one suggests that there is a bottom coming in December of this year. Now we are a little bit ahead, a month ahead, I would say. So that could be a little bit earlier than what we saw back in the second halving cycle. But the alignment is reasonably okay. It doesn't have to agree every single blip, so to say, every single top and bottom, but it does reasonably well align. So this low here aligns with this low here. Okay, we have a high here, doesn't align perfectly well, but we have a high here off by about a few months, etc. So the general trend is that we are in a corrective pattern that's going to last for a while longer. So this is going to test our patience. Everybody, of course, had forgotten about the cryptocurrencies come 2019 when Bitcoin was trading at 3,000 to 4,000, and look where we are now. So that is the whole idea of the market, to burn off all this excess bullishness that we've had, and that can then be explained with the Elliott waves. Right? Elliott waves also mean we have a fractal market. Right? That's what we're looking for. 3, 4, and 5, and then another larger 3, 4, and 5, all kind of pan out in the same way, but on different time frames and slight nuances. But those are the fractal within the market, right? Smaller and smaller or bigger and bigger waves. So let's have a look then again at the chart for Bitcoin, as I showed you on Friday. Focused area is here. We definitely fell out of bed over the last few days, so it starts to look like we have indeed completed the B wave at a minimum of about 38.2% retrace, stalled at resistance, and we failed to reach the 54,000 level that I really was looking for. That would have been a nice 62% retrace. We didn't even reach 51,000, which was a 50% retrace. So that tells me this is a weak market. The anticipated path is still unfolding reasonably well. Again, the devil is in the details, and we should now be in this move lower. And that move lower, as I showed you, can transpire with a few ups and downs if we remember the halving cycle. So we have this one, a few months of a decline, and then back off a few weeks of a decline. This is a weekly basis, a few weeks up, and then a last decline. Okay, so that is what we're looking for. So a few weeks of a decline, back up, a few weeks of a decline, back up, a few weeks of a decline, and that's it. So still, this primary 4 path is filling in nicely. Bitcoin hasn't really gone anywhere. There's no real big crash going on. In that sense, it's still nicely stable. We're still even above 40,000. So this suggests that this is indeed a 4th wave that is developing. Same for Ethereum. I was ideally looking for a 1, 2, 3, 4, 5 setup of this wave C. Well, that didn't happen. We now have essentially overlap. It can still become an ending diagonal. Wave C, what is a ending diagonal? The ending diagonal is where wave 1 and wave 4 overlap. It would be something like this, but I don't count on it. Those are unreliable price structures. So the fact that C waves are often 5 waves does not necessarily have to be the case in bounces. Okay, bounces can all be 3s, 3, 3, 3. It's all good. What one prefers is that one looks at what is statistically most likely, and that is that most often C waves are 5 waves. Well, in this case, it was unfortunately not the case. So it looks like wave C of B has completed, again in the target zone. A little bit further along, I was looking again for around 4,000. That was my ideal. We got 3,500. In bull markets, upside surprises. In bear market, upside disappoints. So it doesn't surprise me in that sense that we don't get there. I still think then that we're in this path, very crude of course, but we should kind of stair step our way lower unless we get back above 3,600. For now, this is my preferred view, that this has completed based on the price action that we've had since Friday. I don't like it, starts to overlap, looks ugly, and looks like things are moving down, not up. I also wanted to show you here, of course, the traffic light. Let's have a look at the traffic light. The traffic light is where is price in relationship to the moving averages. Are we below the 20-day moving average? Yes. Are we below the 50-week, moving average? Yes. Are we above the 10-week moving average? Yes. Are we above the 200-week moving average? Yes. So we have 2 out of 4 in red. So that's not a fully convincing signal, meaning the trend is not that strong. Same for Bitcoin. If we look at the weekly chart, where is Bitcoin in relationship to the moving averages? Okay, I know this is a very busy chart, but you can see the moving averages. We're below the 10, we're below the 20, we're below the 50-week moving average, well above the 200-day. So the very long-term trend is still firmly higher, but the shorter term to intermediate term, longer term trend, so to say, is down. We're kind of in this environment here. We're not in an environment like this. This is a bullish environment, and this is a bearish environment with bearish crossovers of the moving averages. So the traffic light here is 3 out of 4 red. So that is definitely not a good sign, supporting the notion that we have topped for wave C of B for Bitcoin as well. Okay, moving on then, which other cryptocurrencies look like they have topped? Well, here we have Luna. Remember the target zone 115, 125. We got to 118, and what a strong reversal. This is why we have stops in place. This is why we sell into target zones. If we would have gone higher, then you can always rebuy, but this is definitely a sign of, how would you say it? Appropriate risk management, I guess that's the right term. So I think we're in this larger wave 4. How do wave 4s look like? They can be anything. Unfortunately, very complex, confusing price action, but we should now be in some sort of A wave. Okay, corrections always comprise of at least 3 waves. A B wave, I don't even have enough data yet to say wave A is completed, but this is just the general gist of a 4th wave or any type of correction, and then the C wave. Okay, just like we had here, A, B, C. So this was this wave 4. Similar here, then we have wave A consisting of A, B, C, right? And then we have most of the time a 5-wave C wave. So this will be complex, right? Down, up, down, up, down. So expect something similar. We're currently in the down. I don't see any signs of a bottom in place. This is definitely a defensive play in the sense that we probably are looking for a much better, I would say, buying opportunity somewhere in this zone. As I said before, between 60 and 45. Maybe we can say between 55 and 45. That looks a little bit better. Okay, so Luna did what it had to do. I like it. It's good. So it still suggests the Elliott wave is working. How about Solana? Solana had the same. We only did a 38.2% retrace of this entire multi-month decline, and we're now on our way lower. So Solana should follow the same path as Bitcoin and Ethereum. The decline we're seeing since November is corrective, looks kind of overlapping. I have a hard time making this 5 waves except for this 5-wave C wave. So again, this is why I expect C waves to be 5 waves. Here you can clearly see we have the top of wave B, 1, 2, 3, 4, 5. See, black wave B, which is of the major degree, was about 2 weeks, and the current bounce has been 3 weeks. So that already tells us that we had a degree higher bounce than we had here late last year. So the length, of course, of the price action also helps us determine what wave degree we're in. And then we had 2 weeks decline, 1 week up, 2 weeks decline, 1 week up, 2, 3 weeks decline. Fits very nicely with the impulse pattern, 1, 2, 3, 4, 5. This was a wedge. Once the wedge completes, price will break back to the beginning of the wedge. It did, a little bit of an overshoot to this blue 38.2% retrace. That's a typical lower end of the target zone. Remember, as I said on Friday, once a bounce begins, you don't know where this bounce will take us. Will it go to the lower end of the target zone, like here? Or will it go to the higher end of the target zone? We'll prefer the higher end, of course. There's more money to be made, so to say. But we only got the lower end, okay? Only got the lower end. So with that, it suggests Solana has done enough to complete the bounce and should now be in the C wave, which will follow about the same pattern as I showed you for Bitcoin. Will drop, will bounce, will drop, will bounce and drop. Kind of like maybe a overlapping 5th wave ending diagonal C wave. I wouldn't be surprised if that is the case. How about Avalanche? Avalanche starts to look more and more like a top of this wave 5. Then we have to label this one here, and I'm going to take this one away. We have no breakout. So this is then this. This is then this. We simply move things kind of back in time, I guess, instead of forward in time. That's this, and then we'll get this decline here. Again, the $1.60 level must hold, but for now we're moving below it. And if we go below, this is of course on a monthly time frame, the 10-month moving average, which is at 74, then I think we have further evidence that we have completed 5 waves up, 1, 2, 3, 4, 5, and are looking for a retrace. This is not the end of avalanche, not at all. Could be the start of something very nice longer term. But for now, this looks bearish because we're starting to break below the trend lines. Trend lines are important, but not the end all. Here is Binance coin, same here. We had the initial 2 months decline, then we had a 2 months bounce, and it only bounced to the 38.2% retrace. Okay, so the typical B wave target zone is shown here in red. We cannot know beforehand where it will top, at the top of the B wave or the lower end of the B wave. It topped at the 38.2% retrace of this decline. We've tracked it nicely. We're starting to drop here. So it looks like in general path here of a rally for the B wave, then a drop for the C wave is filling in nicely. Again, the devil is in the details. I really would have liked to see it go to about 50, about 500, but this is all we got. It's stalled here at resistance at 465. Can it always tag on more waves, the B wave? Yes, the B waves are very complex, but for now, I prefer to look lower. We failed at the 10-month moving average. And then we should target anywhere between 300 and 205, because fourth waves tend to bottom at the prior 1 degree lower fourth wave levels. Maybe a little bit higher high than this fourth wave, which made a little bit higher high than this fourth wave. But for now, the general path is filling in nicely with, I would say, a disappointing B wave. That's why I had this blue arrow here to about 510, 520, and that we didn't get. That I'm sorry for. I try to assess what is the most reasonable bounce level, and that's the average. The average is 50%. It's anywhere between 38.2 and 61.8 normally, so that the average is 50. And then I would say 90 to 95% of all bounces are between 23.6 and 76.4, and also that gives us an average of about 50. So this captures 95% of all bounces. The 62 to 38%, I would say, captures about 2/3 of all bounces, and the lower ends were unfortunately reached. XRP, it needs to break out of this triangle. Again, if it can't, it can easily go back to $1 of a dollar. No, not even a dollar, at 12.5 cents. Sorry, I was off by a factor of 10. So also this one is on watch. So it looks like in general, the trend is bearish for these cryptocurrencies, and that we could have completed the larger bounce that I was looking for, not reaching its full potential that I was really hoping for as well, with example-wise Bitcoin targeting to about 54,000. That was the symmetry box we were looking for. It failed. We only got a little bit above 50,000, I believe it was. Not even maybe just to about 49,000. So that's disappointing, but it would fit the pattern of not too high bounces. We reached the target zones for the C wave, the B wave. So there's been enough damage to the upside for a bounce to suggest we can now complete the rest of this halving cycle that I mentioned and showed you here. So slow grind lower. Again, probably from a longer term perspective, this might be a very good time to reassess one's Bitcoin portfolio in the sense of accumulation of positions, so to say. It's just an idea. Shorter term, things are kind of like hands off. Be careful, so to say. On the other hand, as well, we might have completed most of the downside already, which was the first couple of months here. If history repeats itself quite nicely, as I showed you here, we're kind of here. So this was, for example, in 2017, we went from 20,000 all the way to about 3,000. Okay, and here we were at about 10. So here we already went through 50%, right? More than 50% decline. So in that sense, the downside risk for the longer term is now getting less compared to the upside potential. That is my message. All right, so that's all I have for today. I think we're lining up nicely once again for this halving cycle. It looks like we might see a couple of weeks of weakness, a couple of weeks of a bounce, then a couple of more weeks of weakness going into, I would think, fall of this year. And then we can start looking for the big primary 5 wave that I'm still looking for Bitcoin to 150,000. There's nothing in the charts to suggest this is not going to happen. If it's not going to happen, you'll be the first to know. We have not crossed any critical level, which is this late 2017 high. That is the critical level. So we're not more than halfway away from it. So a lot needs to happen before I turn fully bearish on the cryptocurrencies. So to say that we will have something like a Cardano type of correction where we are completing a much larger degree cycle wave than I'm currently anticipating. I don't see it. We'll cross that line when we get there. For now, that is not my anticipated path at all. As you know, my anticipated path is for cryptocurrencies, or sorry, Bitcoin to stall somewhere in this target zone. I would say probably around 32,500 plus or minus 2,000. That seems very reasonable to me. This could be a slow drag lower, as we had in 2017, 2018. That most of the damage to the downside has already been done. So thank you so much for listening. Thank you so much for being a valued premium member. Let's have a look at the smaller scribbles on Wednesday. I wanted to do it today, but I thought I'd kind of repeat and recap this intermediate to bigger picture, so you kind of get an idea of what to expect going forward. That's, I think, always the most powerful information one can have. What are the most likely options based on prior market paths that have already been taken by the markets, and those remain valid until broken to the downside, and that is for Bitcoin and Ethereum, the 2017, 2018 highs, and we're still miles away from those, so I'm not too concerned that we will get below those, and if we do, you'll be the first to know. So with that, thank you so much for listening. Take care, trade safe, heads up, see you on Wednesday, and don't forget to ask me any questions. If you can't follow me live, just send me an email and I'll gladly answer. All the best, bye.